Let's do a single bus chart right now. We're doing a reset today after the Fed meeting. We hope you enjoy it globally. This is a U.S. Reset. There are those in the two Americas in the employment game and those that are not. This is claims adjusted for the number employed. Back 50 years, the volatility, the great moderation, the general trend of improving claims, less claims, if you will, the ugliness of Onan, Torsten Slok of Deutsche Bank, and down we go right back to the nirvana of the moment we're in. But it's only a part of America. Can Janet Yellen do policy within two Americas, or does she have to sum it all into one pool?
Well, I think she's trying to do her best to get back to full employment. That's the second of the dual mandate, price stability and full employment, and an attempt to that. Of course, those that have education tend to do well throughout recessions and tend to keep their jobs and tend to get jobs first. So we're trying to get everyone on board. And I think she's just waiting for that process to complete. It's taking a long time now after the recession. But I think we are getting to the point, if you look at the employment creation, where we are creating more medium and middle income and lower income jobs.
Right. Well said. Are we moving and improving in the part-time to full-time dynamic, which is maybe not a priority, but is a secondary important characteristic?
Yeah, so there are some issues with that, and the Obamacare is also playing into that question. But the bottom line is that we haven't quite seen the improvements that we would like, which is why it's a very important question that I debate with clients all the time. Are we anywhere near full employment? Some people think we are at full employment. Others think that we are nowhere near full employment.
Francine, bring up the chart again. Kieran, rather, for Francine, bring up this chart. And it's really, Francine, the arch political debate in America. That's a hugely optimistic chart, but we don't feel that way, Francine.
Yeah, and actually, feeling in this kind of environment is extremely important because it goes back to capital spending from CEOs. It goes back to wage growth. Torsten, is wage growth the one thing that the Fed and Janet Yellen will have to focus more on?
Absolutely, and what's really fascinating about that discussion is that tomorrow we get the ECI, the Employment Cost Index, which is by far the most important wage measure. It's a quarterly data series, but what's critical about that is that has actually, over the last 4 to 6 quarters, started to move higher. So we could get to a really nasty situation for the Fed if we continue to see an uptrend in wages, but at the same time see a slowdown in the rest of the world, dragging down growth, at least temporarily. So it's a very, very difficult spot if wages continue to go higher.
Geographically, are the pole ends being amplified by the oil crisis?
Yeah, you could definitely say that the problems with the oil exporters and emerging markets generally suffering so much is certainly that in the world, for many years I worked at the IMF, and we would say there's no other business cycle than the global synchronized business cycle, but be careful what you ask for. Now it's completely desynchronized with the US going it on alone, and the question is, can the US go alone or will it be dragged down by the rest of the world? But it's pretty clear that the rest of the world, in particular EM, is not doing very well.